Now, according to the U.S. Bureau of Labor Statistics, or BLS, American workers made a median wage of around $1,139 per week for the first quarter of 2024, which adds up to around $59,000 per year. And of course, I cannot speak for everyone, but I think a lot of our goals as dividend investors, a lot of things that we have in common is that we're trying to build a portfolio to the point to where it not only can cover some of our bills, but build the portfolio to the point to where it covers all of our expenses and then some. Now, this has been a huge goal of mine and more or less what I've been doing over the last 8 or so years since I started dividend investing, building out a long-term portfolio with different stocks and ETFs. And I'm happy to announce at this point, if I wanted to just use my portfolio's dividends to pay for my expenses, I at this point could do so. But what's super awesome about the stock market in the most recent years, there's been more and more of these alternative style strategies that have actively managed strategies that can offer investors much more income than we saw historically from different ETFs. Now, like you guys saw in the title of the video, we're going to be going through in today's video and seeing exactly how many shares of the QDTE Innovation 100 ODTE Cover Call Strategy ETF an investor in theory would need to be able to utilize this ETF's income and possibly even quit their job. Now, spoiler alert, it's a lot less than you might think, so you're going to want to stick around. So if you want to go through and see exactly how many shares of this ETF an investor would potentially need in order to retire off the income alone, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now first, let's back up for a second before we go through the math and I share with you exactly how many shares an investor would need potentially, in order to utilize an ETF like this one to pay for their expenses or to basically compensate them for their active income. And we're talking around $1,100 per month. Going over exactly what this ETF is, it says QDTE utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis. Now, this is a perfect ETF to use for a video like this because this video literally pays weekly. A lot of different ETFs out there pay, of course, monthly or even more commonly quarterly. But for this example, for this video's example at least, we're going to be looking at a weekly payout, which again is going to be perfect for the context of this video. So it does this while also providing exposure to the price return of the Innovation 100 index. Now it says right here in the overview, the round till Innovation 100 1 day till expiration or ODTE cover call strategy ETF is the first ETF to utilize 0 days to expiry or ODTE options on the Innovation Index, the Innovation 100 index that is. QDTE seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money ODTE calls on the index, and of course this ETF is actively managed. Now it then says why QDTE weekly distributions. This ETF seeks to pay distributions out of sold option premiums, income potential. QDTE seeks to generate income through a cover call strategy on the Innovation 100 index, and lastly, harnessing volatility. QDTE sells 1 day till expiration options on the Innovation 100 index and seeks to exploit structural market misplacings. Now, an ETF like this one that's a little bit more complicated and that utilizes options might be a little bit confusing to some of you out there, but trust me, once you understand a basic cover call strategy, this ETF honestly makes quite a lot of sense. Now, another thing to keep an eye on right here, the distribution rate is 67.4%. Now, even though a lot of us are sort of used to crazy distribution rates thanks to things like the yield max ETFs, call me old fashioned, but anything that's over 10 or 20% as far as yield goes still kind of shocks me. Now, before we go over some of the numbers as far as distributions go and as far as income potential goes, and if not this ETF has even returned investors a total return long term, looking at the price performance again, this is only one part of the picture. Of course, these sort of ETFs a lot of time have NAV erosion, but because their distributions are so mega big, it sort of makes up for it. But still, call a spade, this ETF is down around 7% as of filming this video. So this ETF has been trading down and to the right, which of course as investors is not what we want to see. If anything, for me personally, I like to invest into some higher yielding options that if anything sort of trade sideways. And even though this ETF isn't down that much, I mean since March it's down around 7%, the ETF does sort of have the look of a lot of these other ultra high yielders and is unfortunately trading down and to the right. Now I will say with a 60+% distribution, I'm going to go ahead and guess that this doesn't really matter, that this ETF has still made investors a positive total return, which I'm going to share with you here in a second. Another thing to keep in mind is the expense ratio for QDTE. This round till fund charges investors just under 1%, which honestly for this actively managed strategy, I think is more or less fair, especially what I've seen across the board as far as these actively managed ETFs. Under 1% is not bad whatsoever. Now, taking a little bit of a deeper look and seeing exactly how much this ETF has returned or lost investors, like we saw, it is down around 7%, but again, those distributions are massive. So far over the past 0.47 years at least, this ETF, with dividends being reinvested along the way, has given investors a total return of 7.2% or around 15.3% annualized. Or if dividends weren't reinvested, around 6% or 13% annualized. So either way, even if the dividends were not reinvested, this ETF has already returned investors around an annualized gain of 13-14%, which honestly I can't really hate on. That's not bad whatsoever. Although I will say it might seem a little bit misleading because again, the distribution rate makes this ETF seem as if you're getting like a 20%, 30% cash on cash return, which isn't really the case here. But like I promised you guys, now to get into the fun part, looking at all these distributions, and remember, this ETF doesn't pay quarterly, it doesn't pay monthly, it pays weekly, which is super weird. I'm still getting used to it myself. But as we can see on these weekly distributions, all the way back since March of 2024, we're looking at a 36-cent distribution, a 33-cent, a 9-cent, a 26-cent, a 33-cent, a 25-cent. Then after that, we had some more 30-cent distributions, a few 20 cents, there was a 14, a 23, a 29. It feels like more or less if you were to average this out, this ETF probably pays somewhere around 30 to 35 cents every single week for every single share that you own, which is insanity considering this ETF only costs around $42 per share. Now, if you guys remember during the beginning of this video, I shared with you that on average, an American makes around $1,100 per week as far as their paycheck goes. Now, I don't know if this is pre-tax, post-tax, I don't necessarily know. This video is of course just for entertainment purposes. We don't need to get into all the nitty gritty, but just for some fun, if we were to try to get to $1,100 per week in income from QDTE, and if on average we were earning around 33 cents per share per week, that means an investor would need to only purchase around 3,333 shares of this ETF, which currently costs around $42 per share. So in theory, if an investor spent around $140,000 and bought QDTE, in theory, of course, this investor could basically retire and have this ETF pay them as much as they're earning on average. Now, again, I know some of you guys might earn more or less, but this is just going off of the average salary of $1,100 more or less per week, which is still pretty crazy. That an ETF for $42 per share could get you to the point where if you have a few thousand shares, it not only could pay for a bunch of your bills, but on top of that, it might even be able to outperform your entire active income, which is crazy. Now, I say all this to say that I don't personally think that this is a good idea, of course, to buy all of something like this one just because of the risks involved. And for me personally, investments like these are a lot more fun to have as a small position in my overall portfolio because, again, just the unknown nature, they're brand new more or less, and I think it's really going to be fun to see how these play out long term. But on the other hand, these ETFs, at least so far, do have a track record of distributing a ton of income to investors, so I guess we have to call it like it is. So now that I share with you guys how a relatively small amount of money invested into this ETF could outperform your active income potentially, or the median active income that is, I lastly want to hear from you guys down below. Do you currently own any shares of QDTE in your portfolio as of right now? And if so, let us know how many you have in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.